The Triple Exponential Average, or the Trix, is a momentum indicator that shows the percentage change in a triple exponentially smoothed moving average. This indicator is designed to filter out price movements that are considered insignificant or unimportant. Trix is also implemented by traders to produce signals that are similar in nature to the moving average convergence divergence. Although many consider the Trix to be very similar to the MACD, the primary difference between the two is that Trix outputs are smoother due to the triple smoothing of the exponential moving average. The Trix indicator smooths price data and then looks at the daily or whatever time frame is being used percentage movement of that smoothed price data. This filters out much of the price noise that's seen on the price chart. Trix will rise on sustained moves higher in price and will fall on sustained moves lower in price. Since Trix is smoothed, it takes time to react to changes in price direction. This can be beneficial because not every little pullback means a trade should be exited or that the trend is going to reverse. How is Trix calculated? It's a 4-step process to calculate the Trix. The indicator is triple smoothed, which means that we are talking a moving average of a moving average of a moving average. We have the 50-period exponential moving average using closing prices. Then we have the 15-period EMA of the result from step 1, the 15-period EMA of the result from step 2, and then the 1-period percent change of the step 3. Step 4 is the Trix, which will fluctuate from period to period. A different number of periods could be used in the calculation. Increasing the number of periods, for example to 40, will decrease the sensitivity of the indicator and may be more useful to long-term traders. Decreasing the number of periods, for example to 10, will increase the sensitivity of the indicator. If you are a short-term trader, you might prefer these settings. Now, how to read the Trix indicator? The zero level on the indicator is used as a baseline. When the Trix is below zero, and especially when it's moving lower, the trend is considered down. When the Trix is above zero, and especially when it's moving higher, the trend is considered up. Trix helps to confirm the trends, indicates when a trend reversal may be underway, and can be also used to generate trade signals. Divergences are another useful aspect of this indicator. Bullish divergence indicates that selling momentum is not as great as it was on prior price drop. Weak selling momentum could lead to an eventual reversal. Bearish divergence is when the price makes a higher high, but the Trix doesn't. It signals weakening buying momentum, which could result in an eventual reversal. As an additional step, a moving average can be applied to the Trix indicator. This is useful for providing crossover trade signals. The moving average is typically of shorter length than the number of periods used in the Trix calculation. For example, if using a 20-period Trix, a 7-period moving average could be applied to it. However, if you followed my channel, you already know that I'm not a big fan of moving average crossovers. If you want to backtest some crossovers between Trix and another moving average, make sure you use it on higher timeframes with small positions. So how to trade with the Trix oscillator? A popular Trix strategy is to watch for price reversal signals, such as a trend line or support or resistance breakout, which is confirmed by a Trix zero-line crossover. For long trades, you buy when the Trix crosses above the zero level, if there is some evidence that the price has started to reverse higher. So you need to search for trendline breakouts, higher swing high or higher swing low. For short trades, you go short when the Trix crosses below the zero baseline, if there is some evidence that the price has started to reverse lower. So you need confirmation, namely a trend line or support or resistance breakout, lower swing high or lower swing low. The strategy is simple and is mainly useful for entries. Unfortunately, the entry point has little regard for an appropriate place to put a stop loss. To control risk, a stop loss must be implemented, preferably just above a recent high if taking a short position, or just below a recent low if taking a long position. Waiting for the price to move back across the zero line to exit the trade is not a good idea, because it can mean giving back a lot of profits back to the market. For this reason, you shouldn't rely on Trix indicator to offer an exit. Here are some examples of Trix zero-line crossover signals combined with price action breakouts. Divergence signals are another great way to use the Trix indicator. This is my favorite approach for the Trix. This occurs when the price action and the indicator are not aligned, which is a precursor of a momentum shift. If you pay attention at this example, you can see how the indicator puts in a retest of its lows, but on the second test is above the zero line. This leads to a massive run higher, where the indicator makes fresh new intraday highs on each push higher. In this example, the second high had a lower reading on the indicator, which is a precursor for a likely pullback. As always, try to incorporate price action with this approach and don't rely exclusively on the indicator. Price action first, confirmed by the indicator. Now, bearish divergences don't work well in strong uptrends. Even though momentum seems to be weakening because the indicator is producing lower highs, momentum still has a bullish bias as long as the indicator is above its center line. Upward momentum may be less positive, but is still positive as long as it stays above zero baseline. The rise is just not as fast as before. The opposite is true for bullish divergences. These don't work well in strong downtrends. Even though the indicator shows less downside momentum with higher lows, downward momentum is still stronger than upward momentum, as long as the indicator remains below its center line. So the trick here is to separate the bad signals from the good signals, which means you must read price action and identify the appropriate support and resistance levels and another chart patterns. Here are some examples of valid Trix divergences. So what are the advantages of Trix? Two main advantages over other trend-following indicators are its excellent filtration of market noise and its tendency to be a leading than lagging indicator. It filters out market noise using the Triple Exponential Average, thus eliminating minor short-term cycles that indicate a change in market direction. It has the ability to lead a market because it measures the difference between each bar's smoothed version of the price information. When interpreted as a leading indicator, Trix is best used in conjunction with other market timing indicators. This minimizes false signals. Regarding Trix limitations, the Trix doesn't always reflect what is happening in the price. The price may be trending higher while Trix is trending lower. We talked before about divergences, which signals a potential end to the trend, but the trend can persist for a very long time, even on weakening momentum. Using the Trix in this situation can be deceiving and can result in missing out on some great upside potential in the price. That's why, when used alone, Trix can offer a lot of false signals. False crossovers are another common issue. A false crossover is when the Trix crosses above or below the zero line, only to snap back the other way, resulting in a losing trade. False signals can result in many losses within a short period of time. That's why I recommend to use longer-term trend analysis to help avoid some of these false signals. Ideally, only take buy signals when an overall upward trend is underway, and sell signals when an overall downtrend is underway. The indicator also has no regard for setting a stop loss. A stop loss must be placed manually above a recent high for shorts or below a recent low if you go long. If there is no respective high or low near the entry point, maybe you should consider avoiding the trade. If you got any value from this and learned something new, don't forget to subscribe, click the bell icon to enable notification for new uploads, and leave us a like to show our support. Until next time.